Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we are diving into a report from ZYNEX Inc. and let's just say it seems like someone was buying their own product. But was it a good deal? Let's find out. This is a Form 8K, which is a current report companies file with the Securities and Exchange Commission, the SEC, to announce major events. It's like a company shouting from the rooftops, hey, we did something important. This report is dated March 13, 2025. The main event happened on March 13, 2025. ZYNEX Inc. reported that they bought back a big chunk of their own stock. ZYNEX is a medical device company. They make and sell devices used for pain management and rehabilitation, helping people recover and manage pain without drugs. Here's where it gets interesting. The company bought 1,700,000 shares of its own stock from Thomas Sandgaard, who is the chairman, president, and chief executive officer of ZYNEX. He's the big boss. This is what is called a related party transaction, where the company is doing business with one of its own executives. To make sure this was fair, the deal was approved by the audit committee and the other members of the board of directors who weren't involved. The audit committee is like the financial watchdog, ensuring everything is above board. The price ZYNEX paid was $2.95 per share. Per share, that was the closing price of the stock on that day. The closing price is simply the price of the stock when the market closes for the day. The board members looked at a few things before approving the deal. They considered how it would affect the company's earnings per share, EPS, and book value per share. They also thought about what might happen if Mr. Sandgaard had sold his shares on the open market, meaning to the general public. The board concluded that the deal was fair. First, the terms were no less favorable to the company than if they had made the deal with someone else. Second, the deal was reasonable and at arm's length, meaning they acted independently, just like any other business negotiation. Third, the price on March 13, 2025 was a fair market value for the purchase. ZYNEX is traded on the Nasdaq stock market under the ticker symbol ZXI. The report was signed by Dan Moorhead, the Chief Financial Officer CFO of ZYNEX. Well, let's zoom out and put this stock buyback into perspective. When a company buys back its own shares, it reduces the number of shares available in the market. This can increase the value of the remaining shares, potentially benefiting investors. It can also improve a company's earnings per share because the profit is divided by a smaller number of shares. In this case, ZYNEX bought shares from its own CEO. This is not illegal, but it raises questions. Why did the CEO sell? Did he need the money? Did he think the stock was overvalued? And why did the company buy those specific shares? Did they believe it was a good investment? The company says the deal was fair and arm's length. However, these kinds of transactions always require extra scrutiny, extra careful examination to make sure everyone's interests are protected. Were the other shareholders considered in this deal, or was it a deal that helped both the company and the CEO at the expense of the rest? ZYNEX operates in the competitive medical device market. Companies like Becton Dickinson and Medtronic are much larger and have more resources. For ZYNEX to succeed, it needs to innovate and manage its finances carefully. Buying back shares can be a good use of cash, but it also means less money available for research and development or marketing. Looking at this specific situation, we don't have enough information to say definitively whether this was a good deal or not. The price was at market value, but the motivations behind the sale and the purchase are still unclear. A deeper look into ZYNEX's financials and strategic plans would be needed to fully understand the implications of this transaction. Overall, ZYNEX appears to be a company trying to make strategic moves to enhance its stock value and manage its resources. While the stock buyback from the CEO raises some eyebrows, the company seems to have followed proper procedures to ensure fairness. The success of this move will depend on ZYNEX's ability to continue growing its business and maintaining its competitive edge in the medical device market. If they do it right, this can be a great move. If they are mistaken about their business, it could be a bad use of cash. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Let us know in the comments what company we should analyze next.